Let's turn to the software space. Adobe disappointing the street yesterday after the close with a fiscal fourth quarter forecast that fell short of the street's expectations. The outlook fueling some fears that the software company's AI investments aren't paying off as quickly as investors would like. We know that that has certainly been the focus here for investors when it comes to Adobe's results over the last several quarters. So the issue that the street is having here with these results, a lot of that has to do with the fourth quarter guidance, and it's really overshadowing some of the beats that we saw in the most recent quarter. They want Adobe to prove that it can make money from all the new AI tools, but there are some concerns about the timeline of that. And then I think, Brad, that coupled with the fact that there are so many startups, smaller players within the space that are doing all they can to win and kind of gain some of that market share from Adobe and some of its other larger peers within the space when you talk about Workday, when you talk about Salesforce. So that, of course, is adding, I think, to some of the pressure on the stock today.
Yeah, you hit the nail on the head with regard to the competitive pressures in the AI space here. Also, you got to think about the fourth quarter more broadly and how it sits within the context for this company here. The Q4 guidance that we've seen as well for net new digital media annual recurring revenue, it is the lowest sequentially for this quarter, and that is adding on to some of the pressures that investors believe to be a part of the story. And then additionally here, there are some larger questions about the growth and the sustainability of that growth into fiscal year 25. Let's remember what type of AI features are really going to be positive for Adobe and how this plays out for them. When you think about going into a platform, whether it be on a corporate or kind of an enterprise model, or whether it be on an individual basis, it's really coming back to this prompt, the query, and then the output there. And for them to get this right, it really relies on being able to have inferential type of models that have been able to access or at least scan so many different other creative pieces so that you could then, Seana, go into an Adobe cloud or an Adobe, to the extent that people are using some of the image generation tools for AI, which we know is already something that people are trying to safeguard against, is you could go in there and say, hey, create an image of Brad on a Loch Ness Monster swimming through the Serengeti or something like that. And it would generate something. I mean, look, people can dream. So at the end of the day, that's what we're thinking about and how quickly they can actually bring that to fruition and have it be as accurate as they intend. And then the monetization on top of that. What is the value that people are willing to pay for it?
Yeah, Brad, those are great points. And I think when you compare especially some of the action that we're having in the pre-market today with the losses here in Adobe and square that with the gains that we are seeing in Oracle, they updated their guidance last night. That stoked some confidence within the stock. You're looking at a gain of just about 6% here in the pre-market. The bullish revenue targets for 5 years out. So they were much expected, the bullish targets here for fiscal year 2026. But I think what's really grabbing the street's attention is Oracle's 2029 revenue targets. KeyBank out saying that it matched the bullishness that the company has been coyly hinting at for a number of months now. So you talk about the companies that are able to capitalize on some of that momentum within AI. We are starting to see a clear picture of the winners and losers. Yes, Adobe has a lot to be encouraged about. I don't think it's anything like people are saying that they're falling behind when it comes to the AI race right now. But I think that at least when you're comparing the two moves here this morning, when you take a look at Oracle's guidance here for 2029, it is certainly very encouraging to the street.
Yeah, absolutely. And we were talking yesterday about this too, just with regard to how Oracle is going to be able to secure and continues to secure, we should say, key partnerships that might make them one of the best software plays for AI and for generative AI. You think about the data sets that companies like Oracle, companies like SAP have, or Salesforce as well, how they're able to leverage the data sets that they do have or their clients do have and wanting to be able to, same case here, query and get an output and make sure that you can layer in different customer relationship management on top of that and all of the other enterprise resource planning tools that they had already had, but just make it that much quicker and the access points that much more favorable for that portfolio client base, and then upsell them on some of those new tiers as well. That's where Oracle has really proven that it's going to try and pull ahead of the rest of them. Partnerships with Amazon, partnerships with NVIDIA, they make that critical for Oracle to be one of those best plays right now.